I'm Jeff Smith.
And I'm Steve Dawson. We're here from DFG to share valuable insights and techniques to protect your organization against fraud. We're continuing this series with another urgent issue we continue to see in our investigations. We're talking potentially millions of dollars lost from your organization because of a lack of controls in this new environment the last year has brought.
Today we want to discuss shell company fraud. We continue to see companies being taken advantage of in the realm of new vendor establishment. If your business ever pays money to any vendors ever, you need to be vigilant in these areas. Fraud involving shell companies can potentially bleed companies of millions of dollars over time because no one is reviewing the list of vendors or verifying why funds are being sent out of accounts payable. Here's what we're seeing.
You may have heard the term shell company in the news or online. A shell company is a company or corporation that exists only on paper. Some exist for legitimate reasons like holding assets or protecting intellectual property. But for today's purposes, we want to focus on shell companies created by employees to receive payments from your organization without the organization's knowledge. What does that look like?
Often employees will create shell companies with names that appear similar to actual vendors so that the name won't seem out of place or suspicious in the disbursement list. Employees with too much control in the AP process can create a company with no information but enact disbursements to themselves. In the last year, we have seen vast changes to the way we do business while established processes have gone out the window. This has made companies vulnerable to change in vendor establishment procedures, as employees working from home have more time and opportunity to create invoices and get them approved and paid without any oversight.
Here's a case we witnessed recently. The victim was a billion-dollar construction and contracting corporation with offices all over the world. The attacker was a project manager that created 6 separate companies that all provided nebulous services related to construction, like scaffolding or parking control. The manager then subscribed to a mail drop for these companies and began sending invoices to the company. Due to the size of the project, the amount of invoices coming in, and a poor vendor establishment process, the company dispersed over $3.5 million to the fraudster in a 10-month time frame. So what do we do?
First, let's look at the new vendor establishment process. When establishing new vendors, be sure your procedures are thorough, documented, and taught to employees. DFG provides a complete new vendor establishment form that includes vetting and validation that extends far beyond simply accepting a W-9. Verify that a business actually exists at the listed address. See what kind of online presence the company has. Make some test phone calls and test emails. Ask for references. Use the vast amount of information on the internet to ensure you're doing business with a real company.
Second, let's talk about the most useful form at your disposal, the conflict of interest form. Annually, require your employees to fill out a form that lists any family, personal, business, and financial relationships they have that are affected by your company. We understand that a fraudster is probably not going to put their shell company on the form, although it would be nice if they did. But when this becomes part of your procedures, it immediately signals to your employees that your company is looking. It changes the environment and gets into the mind of a potential perpetrator and inspires the thought, I might get caught. Is this worth it? This form has now been transformed from useless to one of the most useful forms in the internal control arsenal.
Finally, master vendor file compliance testing. We know that isn't the most exciting sentence you will hear all day, but it can save you and your organization money, time, and frustrations when done regularly and well. Establish a process that has your staff searching the master vendor file for duplicate vendor information in connection to your employee database, missing vendor information, recent changes to dormant vendors, competitive bidding manipulation through vendors with duplicate info appearing to be separate companies, vendors with sequential invoice numbers or low starting invoice numbers, amounts just below any sort of control thresholds in your company. Think $4,900 if $5,000 requires review. Not all of these mean fraud is occurring, but they should be red flags that signal further investigation is necessary.
When compared to the amount of loss you can suffer, these controls are simple, effective ways you can protect your organization. To help with setting the proper tone for fraud awareness among your employees, you can begin by very easily showing this video to your organization. Immediately raise awareness that your organization takes this seriously and wants to protect itself from being taken advantage of. Starting your vendor relationship strongly prepares your organization and employees to expect and uphold this level of validation throughout the course of your business together. For further guidance on new vendor establishment, conflict of interest forms, master vendor file compliance testing, and other topics, visit our website and contact us with questions.
If you enjoyed this content or think your organization would benefit from continued strategies and policies focused on preventing and deterring internal fraud, please click like and subscribe. If there's a topic you would like us to address, please leave a comment below or contact us through our website.